We want to create a strategy that no matter how bad our trade is, we always get out with a profit. See, it is not your ability to manage good trades that makes you a good trader. It is your ability to manage your bad ones. That's what makes you an excellent trader.
Good evening, everyone. In the center of my screen, you see the main window of the ForexStat software. Some people refer to it as the dashboard, and that's okay too, because this is where all the navigation through all the other modules that run the software happen. You see my mouse running around the circles around the square over here. Don't worry about my left side of the screen. This is just my one of my personal PCs that I'm doing the presentation from. And what I really want to do is jump right into showing the mechanics of the software, how the software basically works, how it opens trades, how it manages trades, how it closes trades, how it does everything it needs to do to arrive at a predetermined profit, etc. Everything starts with the main window. I will be opening several other windows out of this main window, and I will leave them open so that we can see how the software does what it does. We'll be able to see the algorithms. We also call them harvesters. If I refer to an algo or algorithm or a harvester, it basically means the same thing. So first things first, though, this particular version of the ForexStat software is slightly different because it has this one module called the simulator. And what the simulator will allow me to do is it will let me pass data through the software very, very, very quickly, so that in a time lapse you will see the data going through the software processing the data, opening trades, closing trades, etc. It will make a lot more sense once I start demoing. So first thing, we'll open the harvester window, and the harvester window, I'll move this to the side a little bit. So the harvester window basically is the engine of the software. This is where all the algorithms, or as we call them, harvesters, are located. Each strategy has anywhere from 1 to 1,000 algorithms, depending on how complicated it is. It could theoretically have more than that, but that would be really getting too complicated. This particular strategy has 20 algorithms. It is for one currency pair, pound yen. We like to trade that pair because when it behaves normally, it has a lot of volatility. It moves a lot, up, down, and obviously those who trade understand that know that you need volatility to make money. So we like that. And so anyway, getting back here to the actual algorithmic setup, we've got 12 algorithms that work in unison. They work as one strategy. It would be like a team of 20 players on a football field. Obviously, you don't put 20 players on a football field on one team, but it's like 20 players playing together as a team. That is exactly what happens. Now, what we see over here is that each algorithm is for a different operation. Some are to buy the pound yen, some are to sell. In fact, 10 are to open long trades. Those are the buy operations, and 10 of them are to sell pound yen or to enter a short trade. We have the deal formula over here. I'm not going to spend a lot of time. Suffice it to say, it is a what you see is a shorthand for certain parameters, mathematical parameters, that will drive each harvester to open and close trades. You've got some additional setups. Again, I'm not going to go into, with the exception that each and every algorithm. Each and every harvester has what we pride ourselves in it. That is the development of what we call the trade recovery. Each and every trade that will be opened by the strategy will have a zone trading zone trade recovery, and this is almost like support in a situation where when the market should go against the original trade, then the support or the recovery will be deployed, and it's designed to turn each trade into a winning trading sequence. Sometimes it will take longer, sometimes it will happen very, very quickly, and that really depends on the market. We are, after all, at the mercy of the market. The market decides what it wants to do. It's not us. If it was up to us, we would all be multi-billionaires, all of us, and probably everyone on this call as well. So we have to follow the market. The algorithms are designed in such a way that they follow the market based on relative price change. We do not follow technical indicators, nor CNBC, nor experts to tell us where they think or where they guess the market might be going. We do not pay attention to macroeconomic indicators either, because ultimately everything is reflected. Everything that happens in the world is reflected in the price of the currencies. And we simply just bypass all that and follow the price of the market. As the price changes, the software knows when to go into trades, when to open them, and it targets a specific profit that has been predetermined. And speaking of the profit, I'll move into the open deals window, into the global open deals window. Actually, we have 11 of them. 10 are the sub windows, and the main window, we call it the global window. I'll open it here. This is where all the trades are being managed while they are open. When the software opens a trade, it will place them in the open deals window, as the name of this module indicates. There are certain parameters that we set, but most importantly, we focus on setting our predetermined target, and this is basically the profit that we're going to be trying to get each time we open a trading sequence. Now, in this particular instance, I have set the profit target at 100 pips or 100 points, depending on whether you are a Forex trader or not. If you are, you understand what a pip means. So we've got 100 pips, which represents approximately 1% of my trading account. Now, on the broker window, I'm going to be starting with $10,000, and obviously 100 pips, roughly give or take $100, is approximately 1% of $10,000. So we're going to be targeting a profit of $100. We don't want to be greedy, but every time we capture that profit, we're going to restart the same sequence again, and we're going to try to capture that $100 as many times as possible. And for that, we will start deploying individual trades creating by these algorithms in the harvester. Okay, so once the profit is reached, or for some reason a trade is closed, it usually will be with a profit. Those trades will be allocated over here to this closed deals window. And I will put the closed deals window down here. And we will see how the trades will be moved once they get open from the open deals window. When the profit is reached, they will move over here. Now, this will happen very, very, very quickly. If you were looking at this in real time, it would be almost like watching paint dry. It would take a long, long, long time for you to realize how this whole process takes place. It could take a week, a month, who knows, maybe a little longer. And what I'm going to do to speed up this learning curve or accelerate this learning curve, I'm going to run the data through the simulator very, very quickly. So you will see in a matter of 5 minutes probably what would happen during the entire week or so, or possibly even a month, depending on how quickly we will run. So having said that, we've got the open deals and the profit targets set up. We have the harvesters or the algorithm set up. Now what we're going to do is open the working orders window. This is where all the working orders that the software will be placing and placing and canceling from time to time, depending on what is happening in the market. It will manage these pending orders, and many of them will be executed. Some of them will not be executed. It really depends on what the market is doing and what the software decides it needs to do. So we've got that, so we'll be able to monitor those. I will open my simulator. I already have the data queued up, and we decided that today we're going to run through some of the worst possible market that we've had. Certainly one of the worst markets that I remember in the last 5 to 10 years. And I went back and came to the conclusion that really the market started turning really, really bad about the end of February, beginning of March, or right about there. So I queued up the data, and this is the real data that actually transpired during this time. Last week, I think we ran January, February, or first quarter of 2013, if I'm not mistaken, and there was a comment. Well, it's working so well this year when the year was good. Why don't you run it through some other times? And we decided to, or somebody suggested, let's run it through the bad times, and of course we'll do it now. Of course, this is also the new hybrid strategy that I developed only a handful of months ago, and those of you who have been trading on FXCM that have the strategy know how well it performs. So having said that, let's just start our harvesters. This is when all the trading begins, and we'll run the data, and I will be making comments as we progress. So as the market makes a move, the price changes and the software knows to open trades, and that's what it has already done right off the bat. We're right here on the third day of March 2014. We're basically looking at each and every minute of the data. We're looking at the open, high, and the low price, and we're traveling through this data at approximately 0.05 second, so about 50 milliseconds per piece of data. Now, down here at the bottom part, this grayed out part of the simulator, you see different lines being formed or being painted or drawn. At the very bottom over here, this is the movement of the market. When the market goes up, you'll see this blue line being drawn to the upside. When the market goes down, then it goes down, and so on. When the market is flat, like over here, then you see basically the market is range bound. It's pretty flat, not a whole lot of movement. Now up here on the upper side of the harvester, what you see is 3 other lines. One is green, and these are all the trades that have been closed so far. The red line, it's an equity line that illustrates all the trades, or the aggregate profit or loss of all the trades that are currently open, and they are in the open deals window. And the blue line obviously is the difference between the two, and that is it's actually a summary of the two. And it really, the blue line gives you the true value, real-time value of your account at any given moment. So we'll switch to the ForexMM mode, because this is the mode that we actually use to trade. The other mode was a broker mode. This is the way the broker sees our trades. This is the way we see our trades, because there are certain things that the brokers, particularly in the U.S., don't want us to do because that presents danger to them, especially if they trade against us, and they don't want us to trade certain ways like hedging, etc. We just completely get around it. We do our own hedging internally. The broker doesn't really know what we're doing.
We've designed the software to give us the option of trading as if hedging were still permitted by the brokerages. So let me get into how this works. In a nutshell, here's what's happening. Let's say we're building our way into a long position and the market turns against us. And now let's say that we've built a strategy in the software that will place short trades when the market starts to move downward. The new short trade will automatically be paired up with the long trade by the broker, and the broker will essentially flatten out the trade. So, for example, if the short trade is larger than the long trade, the broker will close the long trade and execute a short trade in the amount of the balance of the short trade. If the trades are the same size, then the broker will simply close the long trade. In this example, after this flattening out occurs, the software will keep building into its short position and remember where the flattening out occurred in terms of price in case the market turns up again. So our software can maintain the points of reference for us and trade as though it were still hedging.
So we're still on the third day. I don't have this running very fast right now. Some trades were open manually over here. Some trades were already open here by the automated algorithms. Up here we have all the orders that are ready to be executed as the price reaches the point of execution. Getting back to the open deals window, we've got the summary line. That's this gray line over here. I just turned it into blue, and basically this last number right here, it tells us how many pips we need to reach our profit. Our profit is set at 100 pips. We need at this particular point 133, 116, and 125 pips to close with our profit. And when that happens, these trades will be moved down here. Now, there might be individual trades if they reach a certain profit, or a certain part of the algos decide that trade needs to be closed. That trade will be moved to the closed deals, and then the summary will show us how much we're making or losing. So what I'm going to do now, I'm going to speed this up just a little bit because we're going through this data very slow, but that's on purpose because I needed the time to explain what's going on, and we're going to speed this up a little bit. We're right now at the 21st hour and 59th minute, 22nd hour, and the market is not moving a whole lot. I'll remove the drafting part, and let's see if we can speed this up. So here we are. I'm going to go back to my little graph over here in the simulator. Slow it down a little bit. As you see, the market is fairly range bound. It went up a little bit, then down, then did absolutely nothing for a while, then went up. And notice that we're already in the 14th day of April. So we went through a month and a half when I sped it up. But it's a fairly flat range-bound market. We've had a few global closes. I'll expand this window a little bit here and open it up. Here we go. So we've had a few global closes from the beginning, as you can tell. In fact, we're a total of 1,186 pips in the green or black, depending on what color you like better. And we now have a total of 22 trades open in a 650 pip. Actually, it's 550 pip drawdown because we're trying to achieve the 100 pip profit. So the way you calculate how much your drawdown from the very highest cash balance in your account is simply take the amount which is the profit needed to close all deals and subtract your your profit target, which is up here, and that tells you how much of a drawdown you have. And so I'll speed actually, before I speed it up, you can see the drawdown being this red line, how it kind of comes down, and then it shoots back up when the close all deals kicks in. And really, that's why we're using 20 harvesters or 20 different algorithms that work together, and each of those 20 algorithms has 2 additional trades that will come out as support when the market doesn't cooperate. Okay, so doesn't matter where the market is going, whether it's going down, up, sideways, the software will always try to open trades in the prevailing direction and then manage those trades and arrive at that profit. So I'll go ahead and speed that up again a little bit. We see that the pending orders are being processed. Some of them are processed, some of them are canceled. If they're processed, they move over here into this open deals window. Our drawdown is right now right at 700. We've got 31 trades open, and we're seeing that all related deals after TR stands for trade recovery, that this function is closing some of the trades that were open. And the reason why the trade recovery is kicking in, because the market is just not cooperating. Usually there was a reversal, or the market is choppy and it's just giving us a tough time. As we can tell, our drawdown has gone up a little bit here. Well, we're in this in almost at the end of April, and this was not really a good time to trade, even though a lot of our people were in it, and a lot of them are out of that drawdown by now. A lot of them still are in a little bit of a drawdown, but I think the software performed over the last week or so just absolutely phenomenal. It even surprised me. I'll tell you that right now. All right. Any additional question as we're working through this drawdown that we have right here?
No, Joseph, no new questions at the moment.
Oh, already. So here we are. Let's analyze this a little bit. We're going into the first day of May, so we've been trading for approximately 2 months now. We've got a total of 1,515. It changes on me, so excuse me. 1,700 pips in profit. We're currently about 600 pips in a drawdown. Still have 27 trades open. Now, in the meantime, you know, while we're targeting our 100 pip profit, since the last global close all deals, we have several trades that have been closed, and there are reasons for that, because global close all deals is not the only function that closes trades with a profit now, or with a profit as an entire sequence. There are situations, as you see right over here, where the trailing stop gets filled. And what does that mean? That means that the trade is enough in a profit. It would be a shame to give up this profit if the market reverses. So what the software does, it puts a trailing stop on that specific trade, and then if the market reverses, it takes at least some of the profit rather than leaving it on the table and letting it go. Then what we have is the all deals closed after trade recovery. That's when trade recovery actually physically saved the bad trade that was initially open. And of course, we've got the global close all deals. Now, every time you go from this global close all deals to the next global close all deals, you should be so from here all the way to there. That should be, give or take, depending on the slippage that the broker gives us, depending on the size of the position we're carrying at the time, it should be, give or take, about the amount of our profit target. So in this particular instance, it's a little more. We actually made about 169 pips on this sequence. Now the next sequence is just basically just global close all deals right there. We made 109 pips there. Now, since then, a new sequence started, and already we closed a couple of trades with a trailing stop. So let's look what we have down here. We're about 130 pips in a drawdown. Another way to look at a drawdown is like this is your inventory. You open trades with the intention to close them at profit. It's just like if you're a car dealer, you buy a car, you put it on your showroom floor, and you hope to sell it or intend to sell it with a profit. That's exactly what the software does. It opens trades because it thinks this is a good opportunity to do it based on the algorithms that are running it. And then if the market doesn't cooperate, why, then it has to go recover it. It will not sell it at a loss, if you will. It will work with the other algorithms and as well as the zone recovery and try to achieve the profit no matter what. Worst case scenario on these all related deals after trade recovery, worst case scenario, that is a break-even situation. So since the last global close, we've had a few closed trades, and we're running into a pretty good drawdown. Guess what? We're in June. Hello. Okay, we know why that is happening, that us that been through that. And we're about 2,000 pips in a drawdown right now. So let's see how we're going to work through it. This would be literally impossible for a human being to keep track of if he or she were to trade manually, because right now we're keeping track of, we're managing 37, 35, 34 trades. We've got, in addition, 17 working orders. They all work together. There's several closing of the trades on different parameters that are in play, and then the software is also keeping the aggregate running total of all trades being open and closed. So there you have it. As you can tell, the drawdown has gotten just a slightly bigger. Let's see why. What's going on with the market? Well, initially the market, when this drawdown began, the market was fairly flat. You can see it down here, slightly with an upswing bias. Then a pretty good drop down. Then a little bit of a flat market again. Then back up again and kind of flat again with an upside bias. Then down. So this is a really choppy, nasty market that is extremely difficult to trade. The software will be scalping the market at this point. It will be taking whatever profits it can find and wait for the opportunity when the market moves to close all deals with a profit. And it's really relentless. It doesn't have to sleep. It watches the market 24 hours a day. It doesn't have to fight with her husband. Just absolutely has no emotion. Just cold-bloodedly trades the market. Doesn't care also whether it trades money. It just processes data, and that is why it can be so effective. So we're extending the drawdown a little bit because well, we were probably on the short side. The market wants to go up. Let's see what happens, how we would be handling this. Bottom line is what we now know from the real life trading, that most of the people have successfully gotten through the drawdown with a slight profit, while everybody else is all the manual traders that I hear are just holding their heads. They're sucking wind and losing their accounts. We're closing more trades. We brought the drawdown a little bit. We're still roughly at about 2,000 and change. But sometimes, like I said, it takes a little more time, a little more patience. and little more risk tolerance than other times. Sometimes it's easy, sometimes it's a lot harder. But at the end, it all works out. I'm just basically running the data as if we were trading in the middle of July. Right here, we brought the drawdown down quite a bit. We're almost back up. So we're about 1200 right now, going back and forth. That's the choppy market, going up and down, up and down, up and down. But eventually this will close. I don't know when. Sometimes happen, like I said, sometimes sooner. But this is something that people need to be prepared for. Everybody wants to close all deals. Sometimes it takes longer than other times. Sometimes the market cooperates a lot better than other times. And I know time is money. We would all like to have the perfect market, but that's not what financial markets are all about. So here we are, bringing it down. And those of you that have been trading live can relate to this. Sometimes you're up a little more, sometimes you're down, and then eventually, boom, close all deals. And what really happens in the meantime is that we're taking profits out of the market that eventually will help us bridge the drawdown gap. There we go. I think we just had that global close. All right, so when you see this space between this green equity line, and the blue and red line, that's basically the drawdown. We're underwater with the existing trades. However, we're still adding to the closed deals, adding profits from certain trades. And then when the close all deals, when the market moves in our direction, then basically all trades are closed and we get back up to the profit level. So during that time, basically we didn't make a whole lot, as we know. Probably one of the worst ever FX periods in terms of volatility, but we still have about 14% net for those 5 months or so that we were trading. So it's not really bad. If you can do that in the worst possible market, or one of the worst markets, then I think we've got something really special here.